Welcome. In this video, where will ZBCN coin price go? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. The chart shows that a clear downtrend line has formed and that the price has touched it several times but has yet to make a permanent breakout. In technical analysis, such a persistent line of resistance, if the price reacts downward on every touch, suggests that in the buyer-seller balance, sellers have the upper hand at that level. In other words, selling pressure is strong. At the same time, however, one should also take into account the fact that this trend line will inevitably break. Occasionally, such trend lines work as a turning point, and when broken, they lead to a strong bullish momentum in the price. First of all, the price's respect for this trend line proves how technically sound it is. Every contact on the line has been part of a heated power struggle between buyers and sellers, but the sellers prevailed in the first place and managed to push the price back down. These experiences have codified this line as a hard barrier to cross in the market, with many traders hedging their positions with stop losses close to this level, indicating a heavy accumulation of liquidity around the trend line. But each test also leads to a weakening of the trend line. Buyers wait patiently, momentum gradually gains strength, and they prepare to break the line. According to the principles of technical analysis, the more times a trend line is tested, the more likely it is to break. This is because each test eats up the line a little more, and sellers' reserves become weaker. The falling trend line we are currently watching on the higher time frame chart connects the highs drawn in the past weeks and months, giving the impression that the price is preparing to gather volume and momentum to cross this curved obstacle as soon as possible. It should not go unnoticed that, especially in the previous contacts, the sales did not come fast and hard, but with a moderate acceleration. That is, buyers are ready to step in case of an upward attack by breaking the trend line. The critical signal for investors at this point will be how the price reacts at its next contact. If trading volume increases as the price approaches the resistance line and closes above it, it's a sign that sellers are starting to lose power. In technical language, this is called an indecision breakout. It's a preliminary sign that momentum is slowly shifting from sellers to buyers, a preliminary sign of an upside breakout of the trend line. Following such breakouts, the price usually first makes a short-term retracement and then begins the actual bullish wave. This retest phase is useful for testing the health of the breakout and also provides new buying opportunities. From another perspective, a break of the falling trend line also means that the market has crossed one of the psychological thresholds. This line is coded in the trader's mind as the zone where selling pressure will come, and once it is broken, this code is broken. Traders perceive that selling pressure is no longer there and turn to buying. This is not only a technical but also a psychological turnaround signal. If the price manages to hold above the trend line and turns up instead of retracing, the likelihood of a stronger wave of buying increases. Of course, there is some volatility and fluctuation after every technical breakout. The price retests the trend line, testing whether buyers are defending the area. But once we get confirmation that the trend has broken, there is usually a rapid rise in price, with short-term traders triggering stop-loss orders. This leads to a burst of momentum and allows the price to surpass previous resistance points in the days following the breakout. More importantly, this upward movement, initiated by the break of the trend line, triggers what is often referred to in technical analysis as a trend reversal. The downtrend is broken, the price starts looking for new highs, and the trend line now acts as a dynamic support line. But we can't decide the analysis by trends alone. Let's look at other metrics. Stay tuned. When we look at the Elliott wave theory, the current chart structure has a very promising and positive outlook. In particular, the successful completion of the first impulsive move, the first wave, suggests that the market is in the early stages of a new uptrend. The first wave is usually one of the first signs that the market is beginning to wake up. That is, the previous downtrend is coming to an end, and buyers are starting to regain strength. This wave can often be shorter than the others, because investors are not yet aware that the market has changed direction. However, this first move allows the psychological transformation of the market to begin. Right now, the chart shows that the second wave is about to complete its development, perhaps nearing the end of this correction. The second wave is always the correction that follows the first wave, and for many traders, it represents an opportunity. This correction usually occurs on lower volume and in more limited price ranges. There may still be doubts among traders that the previous downtrend is continuing. However, this is also the last correction phase before the third wave, where there is enormous potential for patient traders. The third wave is usually the phase when the majority of the market is bullish. investor interest is at its highest, and volumes are concentrated. During this wave, prices move upwards rapidly and with strong momentum. Many technical analysis indicators also start generating buy signals at this stage. The fact that the market is preparing for the third wave is a very valuable data point, especially for strategic investors, because it means that perhaps the last favorable spots for buying are forming. When the third wave starts, the price usually shoots up in sudden jumps, and those who are too late to buy will either have to buy too high or regret missing the train. Therefore, taking a position before the end of the second wave and patiently watching the third wave rise is one of the most preferred strategies of traders who use the Elliott wave theory effectively. Another important feature of the third wave is that it is often supported by news flow or external factors. In other words, while prices are technically ready to move into the third wave, positive news or a general mood of optimism starts to spread in the market to support this move. Through this synchronization, both technical and fundamental analysis combine to create a more solid bullish backdrop. At the moment, the chart looks quite favorable for such a scenario. With the current correction coming to an end and buyers gaining strength, there is a growing possibility that the third wave may begin. At this point, traders should be patient and allow the market to form the bottom of the second wave, because this bottom will be a strategic buying zone for the start of the third wave. As the market consolidates at these levels, technical signals such as an increase in volumes and strengthening candle structures may also indicate that the uptrend is about to begin. At the same time, it can be understood that big players are accumulating positions at these levels with the increase in volume. In conclusion, the completion of the first wave in the Elliott wave structure and the approaching end of the second correction signal that a third wave with great potential is at the door. This could be an opportunity not to be missed, especially for traders looking to take a long-term position. When the third wave begins, the price usually quickly covers a distance of at least 1,618 times the length of the first wave. This implies serious upside potential. Therefore, the fact that the market is currently preparing this structure is a very positive signal and strengthens the likelihood that prices will begin upward attacks in the coming days. RSI is one of the most important technical indicators that measures market momentum and provides traders with trading signals. Looking at the current chart structure, there is a noticeable falling trend line on the RSI. This falling trend line indicates that the RSI has been making lower highs for some time and has been losing strength. However, this pattern doesn't last forever. In technical analysis, falling trend lines break to the upside at some point, often setting the stage for a similar bullish move on the price charts. The fact that the RSI has such a falling trend line is extremely valuable information for traders, because when this line breaks, it's a strong sign that the market's momentum will turn positive again. If the RSI breaks this trend to the upside, it means that sellers are starting to weaken and buyers are gaining more and more strength. This is directly reflected in prices and leads to an upside breakout of the technical structure. This transformation in the RSI often happens at the same time as prices break their downtrend. Therefore, such a break in the RSI is considered a very reliable leading signal for predicting the direction of price movements. RSI trends should be followed. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.